mi amigos and amigas, it's Dora. No, it's not. If you don't know who it is by now, I don't know what to tell you. Happy hump day to you all. Zebeshian Savage, or Zebekshian Savage. It's hard to say that little transition at the end. So stack that dry powder. Definitely do that. If something juicy happens, I am ready to buy, sell, like locked, loaded. What's going on, everyone? How y'all doing? We're waiting for Jerome Powell from the Fed. The reality is we're going to get a pause. The market's pretty much pricing in the pause-a-roni. You might see a little bit of volatility-a-roni happening, but for real, we're going to pause. 99.4% chance is coming from the CME group. David Austin says, did we get regs? Did we miss it? No, we haven't got, no regs. No regs at all. We're waiting. We got the Senate Ag Committee for regs. That's coming up, I think, tomorrow. I've got a live stream already scheduled for that. Check it out. It's on the books. Today, Jerome Powell and the Fed. Pause, gonna happen. Is he gonna be an a-hole after, like at 2:30 when he goes on the mic? Probably a pretty good chance of him being an a-hole. So, what do you think? You think the market's gonna be able to withstand this action? Do you think we're going to be able to see a bit more green up on the screen? Hyperliquid's hype has been all over the place. Massive pumperoni action. Bazinga says, I need a deep dive diversify masterclass for us members, Klaus. Let me know your thoughts. I think it's a really good idea, diversification. I really do. And I think a video like that is a really, really good idea video as well. The thing is we can go deep into the weeds on tons of things. We could dig into companies' financials. Like I got Coinbase's up on the screen. Because there's a lot of dynamics to these financials. There's a lot of dynamics to if you're going to diversify into a company, you got to make sure that their books are good. You got to make sure they got money, right? Because every industry has slumps. Every industry has times when it sucks. There's times when crypto is good. There's times when crypto sucks. But the times that it sucks, you have to know if what you're holding on to, like if it's a business, are they making money? Do they have cash on hand? Are they something that falls in the risk or a more safe haven play? Are they more an infrastructure play? There's a lot of that you got to look into. And you got to think of what kind of risk you have for safe haven because we have different levels. BTC was considered digital gold, right? We know that. But at the same time, it's not performing like gold. It's performing more like a lesser volatile crypto because even with crypto, you have different things that are kind of risky, super risky, mega super risky. Oh crap, I just screwed my neighbor risky. Yeah. Like nutso, the pump.fund launch token shit, that kind of stuff. So, the deal is this. You can get into diversification, but you gotta be well versed on the financials. You gotta be well versed on how that company is compared to its peers. Otherwise, you're just throwing darts at a board. No, you don't throw darts at a board. You freaking hunt and you go for the things that fit. Sometimes they're really boring. Sometimes they're a 6% yield utility dividend that you were able to buy super cheap. And now that 6% is even better because where you bought in was so low compared to its payout now. That's juice. Because that not only means that your native asset that you're working with is going up, but you're also earning on that asset going up. This is like stacking on stacking on stacking. And these are the safe haven plays. Now, the only way you're going to ever feel comfortable about doing something like that is if you understand the financials behind a company. You can't just put faith into this shit. You can't just go all over the whole oh, Brad Garlinghouse or David Schwartz is going to flip the switch because we've heard that stupid shit all the time. Oh, we're just waiting for... No. There are industries across the board that have ups and downs. Sometimes the banking sector is doing really good. Sometimes the banking sector sucks. Sometimes oil as an asset sucks. Sometimes it's doing great. So the deal is is you got to know what's behind it. You have to understand what its supply and demand metrics are, the dynamics around it, what causes it to have an increase in demand. Is there a big demand on crypto right now? Hell to the fuck no. It sucks. It really sucks. Volume is crazy low. What you're noticing in terms of socials is super low. Look at this. This is a Fed trading day, and we're only at 110 billion in volume. That's it. That's it at all. And no, not muted at all. My sound is coming in nice and crispy clear. I have my feedback. I got it up over here. Just throwing it out there. Yeah, see, look, I'm blasting into the orange. You don't want me to turn this bad boy up any higher. I can move it a little bit closer. Or I could talk into it and give you all the deep, deep sounds. Ooh, baby. There you go. I'm not on mute. Trust me, I'm not. The thing is this. You got to know what your risks are. And in crypto, you got to know, too, like how are you going to make money on these things? Like, what is going to make BTC go up to 150? What's going to make ETH go up to 45, 5? What's going to make XRP go to like $5? Like, because we have to think about this realistically, right? What are the financial dynamics going to do? Do we have a strong retail market right now? We don't. We know a lot of people are tapped out of dry powder. Retail has really been pooped. Retail has also been let down a lot. We had a lot of promises to us, and oh my gosh, you know. Gold, silver has been stealing the show as of late. That takes a lot of money out of the room. AI has been a bubble that a ton of people have frickin' been getting into. So what happens there? That takes some money away. Look at your views of your favorite creators out there that are crypto related. Their views when the price action was hot and heavy during like November, December, January, going like a year ago, are nothing, are like blowing the doors off it now. Like it's across the board. Because just the excitement isn't, the casual crypto person is like, I don't know. So there you go. That's what you're getting right now. Now, Jerome Powell and the Fed, they're expected to pause. So if they're expected to pause, we're going to expect what? Rates to be higher for longer. Safe haven assets are going to keep on doing what they're doing. Gold over 5,300 right now. 5,300. Silver is at 111 as we speak. All right, this is nuts. So, safe haven right now is stealing tons and tons of money. Nick Golden says, so what do we do? Like, that's why I said diversify. That's why I'm not worried about any of this. Because A, you got to play crypto with the money you're willing to lose. You have to look crypto as like a freaking casino. The odds are stacked against you. There's insiders trading this stuff. There's bots that trade it faster than you. There's insiders that get the knowledge ahead of us. And there's market makers that you've seen move the market every which way. Come on, some of these moves and you're only seeing minute little pumps. That's a joke. That's a joke. So what do? You just make sure you're diversified so that if one sector is bad, at least maybe you've got a couple other sectors that are hot. Like for everyone that like aped into crypto, cool, like I get it. Trust me, I understand sometimes you just want to play risk, but you have to understand that's the thing you're in. And I know some people are out there going, bro, long term, I'm 20, 30 years out. Awesome. Beanie Babies did this whole like crazy spike, and then 20, 30 years out, you think people like after the crash are like, yeah, it's coming back, baby. Maybe like the Princess Di one. But the reality is a lot of times you have to understand the market dynamics. What drives demand? What is causing certain things to happen? I mean, are you really excited? $1.91 XRP? No, you're sitting here going, dude, this is sub 2. This is sub 2. Guava Huncho says, I'm down 120K on XRP, average of 279. And that's my point. The reason people were all excited at 279 is because everyone's like, oh, moon, moon, moon. There wasn't retail money to moon us on this move. And the big crypto week reg push that happened, That big push, we saw what that gave us. We saw the amount of steam that was in that engine. And that steam lasted from right here, the 8th of July, and then we started going down on the 22nd of July. You had 2 weeks to play the hot pony. 2 weeks. For those of you having trouble with the sound, just hit the refresh button. Actually, I'm going to make a note of that because my sound is crystal clear over here. Hold on a second here. Trouble with the sound, refresh the stream. There we go. Okay, so that's my whole point. Is you have a lot of people in here that their averages are high. You had a 2-week period, man. And then from that 2-week period, the market has just lost interest. Look, the volume peaks for XRP specifically were right here, mid-July. Since then, the volume has dramatically gone down. It is easy as could be to see it. You know, the other thing too is you're not cooked if you've got other stuff out there that's bailing you out. Think of what business out there sells one product? Like, there's not many. They diversify. Even Amazon. Amazon makes a ton from Amazon Web Services. They have other different things. They've got storage solutions. They diversify their earnings. Diversify what you're getting into too, because holy crap. Yeah, maybe one thing's down, but you got 3 or 4 banging. Everyone knows what I'm talking about. For anyone out there that used gold or silver over the last 3, 4, 5, 6 years, guess what? Your gold and silver hedge is totally paying off for the fact that crypto sucks massive balls right now. Wildcat on 3 says, people need to get into dividends. It's boring, but it works. For real. Dividends are freaking awesome. You just have to know the financials of the company that you're getting into. You just have to understand, if I'm parking my money somewhere long, it doesn't matter if it's a bank, it doesn't matter if it's a fund, it doesn't matter if it's on an exchange. I need to know their financials because I want to make sure those bitches don't go belly up and take my money with them. That's how it is. That is totally how it is. Dividends are boring, but they work. That's why I was totally saying we should fight for yield when it comes to the new regs coming out. You gotta fight for yield. Seriously, that's why, because you could earn passive income on crypto. So even if the market tanks, even if XRP goes down, you're still earning X% based on the number that you bought or based on the value that you bought. So at least you're getting some cash flow in, even on a declining asset or during bear market times. And this is a highly volatile asset. In terms of recommendations on dividend yields, the general rules go like this. Higher the dividend, the riskier it is. The majority of the market, okay, I'm talking about we're talking big market, feels okay with dividends from 4 to kind of 6%. Anything kind of north of 6, people start thinking, okay, what kind of risk is in there to offer that kind of yield? Or what kind of future growth is there of that industry to sustain that high of yield? Because think, if they're paying 6, 7% out on yield, that's money that company cash-wise doesn't have because they're giving it to yield. They're giving it to you. They're giving it to me. So higher than that, people start getting a little freaked out. Lower than that, it's considered a very safe haven play. There are dividend players out there that you want to look for that have constant payouts. There are some that have been paying out for 30, 40 years straight. Imagine getting paid on your crypto for 30, 40 years straight, no matter it went up or down. That's what's happening with dividends. Waiting for the Fed. I've got the stuff up here. Let me hit the refresh button and see if he's going to give us in the rear. 159, the Fed comes on it too. Bigger the risk, the bigger the reward. That's right. But guess what? If you go bankrupt because you picked a 1 in 10,000, a 1 in 100,000, that sucks balls. Well, guess what? I can play that game, but also hedge my risk with other things that are going to pay me in the meantime. So you have a chance of hitting it big, but you also have a much greater chance of getting washed. And that's what people are starting to understand. The risk is getting washed. Bruce says, dude, it's 2 p.m. I know. I'm hitting the refresh button. Maybe you should be live on the stream, caught up in time. I keep hitting the refresh button, waiting for the old thingaroni to show up on here. Yes, Humandrano says, preach a class. I hope people are taking notes. There are people that do whatever they want. And that's the thing. You do you. Hold on. Let me get it right here. Let's go to HTML. Oh, wait, come on. Did I beat him to it? Oh, come on, baby. Give it to me. I got to keep refreshing. Come on. Here we go. The committee, Cheeks, into support of its goals, the committee decided to maintain. It is a pause. The Fed has paused. Boom, shock, alaka. Trick dropping support on the channel. Says, thank you for all your hard work, Klaus. May the gods of shiny bless you with profit. That is a really great sense of wisdom there, Trick. Why? Because a lot of us have hedged crypto with silver and gold. Like, seriously, what does Jossie Saucy just say? It's hard to be upset about XRP going down when my silver is roaring. Exactly. That's why I'm not worried about this. And that's why everyone out there that's like telling you to ape and stuff, I get it. You could hit the lotto ticket. But yo, guess what? You can also win a whole bunch of other ways without playing the lotto. There you go. Give me a second. Let me take a little drink here. Everyone give Trick a big thank you for supporting the channel. I greatly appreciate it. Fed did pause for those of you that are chilling out. All right. Hyperliquid still being the thing that's moving the most right now. The majority of the alts are going to pretty much chill out until 2:30, and that's when the Fed, Jerome Powell, comes on the mic. Guy Kemp says, I expected the pause. It was the right thing for them to do. Yeah, it was the right thing for them to do. And here's why. Because we still have inflation that's a bit high. The time to cut was a bit ago when you could have gotten a bump from the optimism of the market. But see, now the market psychologically is going pause, pause, pause. Jerome's going to stick it to Trump last how many months? Because remember, Jerome's out in May. Just throwing it out there. Let's see. Bruce Hansen says Ripple doesn't even release $1 billion in a month. They don't. They lock the majority of it up back into escrow. So for those of you wondering, that's kind of how it goes. Let's see. Shane Wilkins says, thanks, bro. He's saying that to Trick. Yeah, thank you very much. Thank you, Shane, for the support earlier in the stream. Everyone give Shane a big thank you as well. That was before I was officially on the microphone. But yo, seriously, be like paying attention to stuff. Be paying attention to the news. Yeah, crypto payments are up. But they're up because stable coins are being used. Like, you see what I'm saying? Like, just be on the news and be realistic with yourself. That's all I care about. That's all I care about. Because, for real, you're going to hear all sorts of stupid stuff. All sorts of, oh, you know, emergency Federal Reserve meeting. All this. No. Just be ready. Whoa, baby. They got some boring tunes up on there. That's right. Fed paused. Not a patient person says, why do I have to wait 45 years to XRP move up to $10? The biggest money was made in the beginning. That's been true with Bitcoin. That's been true with ETH. That's been true with XRP. The biggest money has been made in the beginning. Circle's IPO, biggest money was made in the beginning. Now, you could still make money, but like the biggest, like the life-changing holy crap amount, yeah, that was made right off the bat. So the thing with XRP is there's people in at different averages. There's people watching this right now that probably have an average in the 30-cent range. We've been covering crypto for like 6 years on this channel. So maybe they're still deep in the green and they're like, hey, this is cool. I can hold for a while. I sold so much off that I still have tons of profit and I still have tons. Like, I mean, there's people in all sorts of situations. There's BTC whales that just dump hundreds of millions of it at a time. Shane dropping support on the channel. Everyone give Shane a big thank you. Paul's Feast says, here's a good one. Where is all the precious money going to go once they start selling off? Maybe once clarity gets approved, it could all flow right into crypto. Exactly, and that's what I'm trying to tell everyone. Crypto isn't dead. It's so volatile that everything has to be right for it to roar. Otherwise, it sucks. But that doesn't mean there's not other places in the market that are freaking roaring. You got to think there are other sectors out there. What about like your Nvidias, your chip makers? They're making tons of money. Have you tried to buy RAM lately? I'm looking to build a new PC, get a little DDR5 action going on. Holy crap, do you know how much 128 gigs of DDR5 is going to cost me? That is a ton of money compared to what it cost me a couple years ago. So the company that made that is making money. There's always something hot. There's always something banging. The clarity vote thing is tomorrow. Now, the thing that's happening tomorrow is the Senate Ag Committee. All right? That's a subcommittee within the Senate. All right? It's a smaller group. I think it's like 19, maybe 24 people, something like that. Okay? It's a small group of people. It is majority Republican, but they do have like a Democratic like head of that side of the minority side. And either way, that's a subcommittee. So what they do is they give their regs in and they push it on up. Okay? Then that goes to the entire Senate. The thing is, we don't have the banking section yet. So you can push up one piece of regs, but you still need this really big piece over here with the yield, the banks, etc. The banks are fighting this thing hard. By the way, David Austin dropping support on the channel. Everyone give David a big thank you. Thank you very much, sir. Jerome Powell does suck. He's been late to the party, period. He was late to raise rates when we dealt with the whole pandemic. He was late to lower rates when everyone in the European zone, when Canada, when Australia was lowering rates. Just throwing it out there. And for everyone who's watching, that's why I bring you the news of all sorts of shit. So you're not just stuck in, we're going to get to $10,000 on Friday. No, I'm showing you where other money is going. I'm showing you where the big money goes. I'm showing you what the IPOs look like that are associated with maybe something you're into, or maybe you're into IPOs. I bring you everything that I freaking can. I bring you the payment news. Not, well, here's the path to XRP reaching 1,000. No, real stuff. Global macros. What about the regs? What's been the biggest pump ever for crypto? Regs week. Oh, crypto week. Yep. And when we elected a pro-crypto like House, Senate, President. Oh, okay. See, so that's what I'm saying. Those are the catalysts for you. You can't lower rates with gold at 5,000. Yeah, you can. You can easily lower rates with gold at 5,000. Rates are inflation. Rates, that is what rates are tied to. Inflation and stabilizing markets. There are layers to rates. You need to stabilize the housing market. You need to stabilize the job market. Rates are a great tool for that. They're a blunt instrument, but they're good when blunt works. Rates, quantitative easing, all sorts of stuff. Fed tools. Whew. Here we go. Extra cheese and bacon. Loving it. Chucky says, yes, exactly. I want yield. We all want yield on crypto. Do you not, like, for anyone out here that's fighting the whole, like, should we wait for, like, yield on crypto? Hell yes, you should frickin' wait for it. $6 trillion is sitting in banks right now. It's actually technically 22 trillion. But of that 22 trillion, 6 trillion would be expected to leave banks and go into crypto. Michael Keenan says, is the government going to shut down soon? I'm not up to date on that. All right, so here's the deal. Odds are still way high for government shutdown. Word is that the Democrats are going to do everything. They're going to let everything go through except for DHS because of the whole ICE situations in Minneapolis. So they're going to use that as the one leveraging tool, saying, look, we'll fund everything else. We are good with everything. Done. Awesome. Thumbs up. But our line in the sand is this. So instead of shutting everything down like it happened last time, this would only just be like one section, one funding section being shut down. Odds are pretty high that that's going to happen. Every Democrat that's been out there is saying, we ain't voting for it. And you need 7 Democratic votes in the Senate. Fetterman has already broken. All right? Fetterman has already broken. So they only need 6 more to go over there as long as all the Republicans go that way. Keeping you up to date. Shane says, do you think it's better to build houses, to buy or rent? Okay, here's the house thing. The best way to make money on a house is with a wedge deal. You buy a distressed property, all right? But remember, you need to have the capital for it. You need to have the know-how, and you need to have the market that can support it. Not every market is hot. But you buy a distressed asset, you fix it up, right? So it's worth more than, way more than what you put into it and what you bought it for, plus the taxes, plus the realtor fees, right? Plus all that extra stuff, all the extra 15, 20% that you have to budget into the repairs and all that stuff. You could either rent it, make that cha-ching, cha-ching, cha-ching every month, let that thing appreciate over years, put the money into it, equity, get my point, or you could flip it. But if you get in as a wedge and you fix it up to move in quality, you have the best chances of selling it. That is like the safest real estate play right now. For those of you that need flexibility, yeah, I get renting. Trust me, I get renting, man. And this is not advice. I'm just telling you like what is happening in the market right now. If you need flexibility, awesome. Like, okay, if I was renting now, I would rent a little bit longer. This is if I was renting. I'm not renting. If I was renting, I would wait a little bit longer because I know that rates are going to be expected to come down further within like the next year, next like 18 months, something like that. And you're going to have a lot more homes flood the market, which is going to bring prices down. It's going to bring rates down, and it should bring more listings because a lot of people are still going to be green on their home in terms of how much they made, but the interest rate is going to be closer. There's a whole bunch of people that bought with interest rates that are crazy low. So they don't want to leave like a 3% loan and go up to like a 6% loan. Bazinga dropping support on the channel. Says, what exchanges or funds do you recommend for us to utilize for our diversification? Side note, SoFi is opening crypto accounts like crazy to think about it. Okay, here's the thing. When it comes to like exchanges, I'm not a fan personally of putting money on exchanges. If I'm going to buy crypto, the money like is locked away. It goes to the exchange instantly. Boom, I purchase instantly. I don't leave cash on exchanges. I can get liquidity to my exchanges quick. I don't have any problem with that. Got a few I can use, not a big deal. In terms of funds, here's the thing with funds. This is just what I do. I look for funds that have like really good numbers and like really good holdings, diversified holdings. And then what I do is I look at their individual holdings and how they're weighted, and I build my own compared to that fits my needs. So like maybe there's something in their fund that I'm like, ooh, I don't like how the financials look on that. I'm going to leave that one out. And like I told you, we can get into financials. It's not a big deal. It's not hard to do. Once you know what to look for, it's so easy. And this helps you get rid of a shit ton of risk. And then I'll look at the other stuff in the funds and be like, okay, well, maybe this one is really hot. I might go more like overweight. Maybe that one in the fund is listed at maybe it's 10% of their holdings. I might make it like 17% of my quote fund. So I just throwing it out there. Just be like really cautious because there's a lot of places that honestly aren't making money. The Winklevoss twins, right? Their exchange was losing money. I mean, would you, like, think about it. Of all the exchanges that are out there, and I'm not telling you what to do with your money, but would you really want to buy crypto on an exchange that's losing money? Don't get me wrong. They got the cash injection with the IPO, blah, 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 blah. I get all that. But when you have options out there, there's other players that have a really good amount of cash on hand. So you're like, oh, I don't have to worry about my exchange. Oh, I don't have to worry about JP Morgan going broke. Like, you know what I mean? Like, you really have to know what's behind the financials of the company that you're getting into. Fife Dog says, I stay away from anything UPS anymore. Coming from the guy behind a wheel right now. Nice. Love it. Let's see. If you have crypto on it for over 1 year, you get a huge tax break. Yeah, you don't have to pay the crazy cap gain. And that the tax strategy also comes down to state income. There are some states that have zero income tax. And there are plenty of people that open corporations in those states and use them for their tax shell. It's just how it goes. They do that with cars, too. A lot of people go with Wyoming for car tax. There's a reason for it. Right now, we've got a pause from the Fed. We're just talking like all things crypto, all things finance, gold and silver roaring. Overall, crypto market is kind of holding pretty steady from the move. Hyperliquid being the thing right now that's just lighting things on fire. Up 15% last 24 hours. And again, thank you, Shane. Thank you, Trick. Thank you, everyone, for the support. I greatly appreciate it. Jerome Powell will be on the mic in 16 minutes. That's what we're waiting for, everyone. 16 minutes until JP gets on the mic. That's when the market really reacts. So until then, we're just talking everything. And my whole thing is this, dude. Chick, whoever, blue-haired giraffe, maybe you love the risk game. fuck yeah, dude, then do you. That's freaking awesome. But just understand, right, what you're getting into. Make sure that you understand that you know the risk. Not, I know the risk because people are lying to you, or no, you know the risk because you're actually like learning about the shit, the real shit, right? Some people, right, when you get older, you don't want to play this risk. That's why, like, there's a lot less older people in crypto because they don't want their money at risk. They want to park their money somewhere super boring because they're so close to retirement. They're like, we're right there at the finish line. Why would I want to risk it? Layoffs. Yeah, there's a lot of layoffs going on right now. Amazon just did a huge clump of them. Someone just said 30,000 in UPS. Yes, they did pause. Just throwing it out there. Yeah, do options if you like risk. Yeah, options are crazy risky. Crazy risky. Quavo Huncho says, Klaus, if clarity doesn't get fixed before midterms and Democrats win, do you think the XRP crypto is done for? It'll just go away for a little bit. We'll go back to the Gensler era bullshit of stifling crypto innovation, regs that don't really fit. Then think about it. You see which way the people are voting, and that's the whole thing. So, like, that's why they use these midterms, because these midterms are like, well, wait a minute. If the Democrats win a lot of votes, that means people aren't happy with Republican policy. That's why midterms are cool. It kind of gives you a good gauge on what the public is thinking. Now, if this midterm happens and all of a sudden a whole bunch of Republicans win, well, then that's basically saying, hey, Republican policy is winning. They don't like the radical stuff on the other side. If the Democrats win, that's basically saying, hey, look, we think things are a little too wacky. We need to rein it back in a little bit. Just throwing it out there. So if the Clarity Act doesn't get fixed before midterms and Democrats win, is XRP crypto done for? No, it just goes really cold. Like Gensler era cold. Because think about this. What business then is going to want to keep developing in the United States if we don't have regs? Think, like tons of companies were like wiped out by the SEC during the last administration. Shit tons. Tons of cryptos were wiped out. So we got to be careful here. And that's why executive orders, okay, they're cool, but they're not permanent. Judge Torres, that's her interpretation of a law. Some other judge can interpret the law differently. Gary Gensler interpreted it differently and used that as a tool to go after crypto via the 1933 and 1934 Acts. Just throwing it out there. Bazinga, member for 3 months, rock on. No, today was a pause. Today is a pause. And we're just waiting for Jerome Powell to come on the mic. So if you got your questions, got your comments, now is the time. Volume for the market, too, is been very muted as of late. Waiting to see something kind of kickstart the engine here. That's kind of Matt Grimes says, I'll say it again, EU goes live crypto March 20th. Yeah, cool. But the EU market doesn't have as much money behind it. It does have a lot of money, but not as much money. So the impact isn't as big as if, like, you had, like, a mega U.S. business freakish flood, $6 trillion just from banks alone. Like, same thing. People can say whatever they want about, like, Japan, banks, XRP, and all that stuff. Japan and banks is small. Zoom out in the globe, and Japan and banks is small. Like, it just is. Oh, Australia is going to have an XRP ETF. Awesome. It didn't do jack shit. Because as much as I love Australia and all the good people down under, that's my Australian accent. Got to be honest with you. The Australian market just isn't that big. Love my Canadian peeps. Love everyone from Montreal and Quebec City. I would even support secessionism, my Quebec watching fans. Yeah, so ask the Canadians about that. They know that their economy is only so big compared to the beast of the United States. It sucks. The United States is the dog and the world is the tail. It sucks balls, man. Eleanor just posted something awesome, Klaus. Check it out. Let's find out and see what's happening with Eleanor. She's a cat lady, so remember, she does lose points. Eleanor coming up. Who is it that posted that? This is Pro Pocket Watcher. Well, thank you, Pro Pocket Watcher. Here we go. This brand new from Eleanor. New Pro Crypto Super PAC Fair Shake, which, by the way, was 91% successful in last election, electing Democrats and Republicans that are pro-crypto. That's fucking awesome. has a war chest of more than 193 million cash on hand heading into midterms. Most of the money comes from Coinbase, Ripple, and Andreessen Horowitz. Coinbase 25 million, Ripple 25 million, and Andreessen Horowitz 24 million. With the midterms approaching, we are united behind our mission with Fairshake continuing to oppose anti-crypto politicians and support pro-crypto leaders. A spokesperson for Fairshake. Well done on bringing up the news. What else do we have? Oh, we're gonna talk about some SEC action. I don't think we're gonna be doing that one, but I do like the fact that they're trying to get the crypto super PAC going. Guy Kemp says, if you want regs, better start talking to your congressional representatives. Totally agree. I'm going to have a little drink here. 0 calorie Sprite. Thank you very much. But yeah, Eleanor coming in with the heat. Cat lady, though. Just saying. You look. Cats. I know. Some of you out there like cats, but you know I got a house full of dogs, right? You don't hear about the crazy dog lady. You hear about the crazy cat lady. Staking. Love it. Quavo Hunchos says, thanks for being a real one, Klaus. Is this the only channel, or this is the only channel I watch because the other channels are fake copium pumpers. Even as an XRP holder, I want real news, good or bad, keep it that way. Here's the thing. How many times have you seen out there XRP overnight success? Guy Kemp says he's a pro-crypto Democrat. Well done. I'm fairly democratic with certain things. I think we should legalize the shit out of a whole bunch of stuff. I think, without getting in trouble, you two people that are going to be watching this, I think, not telling you what to do, I think we should legalize all the green stuff. I think we should also legalize the certain mushrooms. Hell yeah, man. I'm down with that. I did watch what I say. I did watch what I said. But for real, staking would be big. The hopium stuff gets old, though. The overnight XRP's path to 1,000. You're rich and you already don't know it. What are you doing? Selling lotto tickets to people? Like, of course, everyone that buys a lotto ticket, like, wants to, like, make lotto ticket money. But, like, we know that's not how business works. We're not just throwing money away. We're not just closing our eyes and throwing a dart on the board. That's where we're vacationing next, by the way. I know where I'm vacationing next. Anyone know? Anyone want to take a guess? Live from Charleston, South Carolina, pregnant wife vomiting. Oh, God. Sorry about that. Speaking of, for those of you who are wondering why I'm wearing different glasses, it's because I think I lost mine. So I got the backup ones on. Just putting it out there. Sorry about that. Hopefully the wife feels better. Shout out to all the chicks and dudes out there. If you identify as something else, shout out to you too. I don't know. Like blue-haired giraffes. 99.4% chance of getting a pause, which we knew. That's why the market didn't freak out. So when we got the announcement, that's why the reaction was muted. BitGo's IPO sucks massive balls. Patrick says there are good influencers out there. Klaus is good also, but so many bad ones. But there's also there are, Patrick. There are good influencers and bad influencers in every freaking sector of YouTube. I'm not an influencer. I'm a news channel. I will tell you about the degenerate shit that I do. Someone said Guade. Well done. Golf clap. Guade. Guade. I tell you about the degen shit that I do, but like I bring you the news. And then I tell you if I'm doing more degen shit. Like, remember I made the big announcement when I told you I was buying a whole bunch of like gold stonks? Well, those fucking gold stonks have gone through the roof like insanely. Oh yeah, while paying yield. But like I tell you all about it. I tell you when I buy some BTC, some ETH lately, a little bit of H. But I've been telling you all that. I'm open. There are other good ones out there. I just think the hopium ones just keep selling you the same shit. The carrot that's right in front. Oh, overnight. Oh, shut the fuck up, man. It's so lame. It's so played out. The crypto market's way, way smarter. By the way, the next FOMC meeting is going to be the 18th of March. Current odds have it right now at a pause. 86% chance of a pause. And yes, well done anyone out there that thought of Guate. Harold No Kumar says, what do you call a blonde who dyes brown? Artificial intelligence. That's funny. That's an AI joke. That'll be good for the algorithm. That's cool. Jerome Powell on the mic in 5 minutes. David Austin, that is good to know. Just be very careful because you always got to worry about the Fed rallies. Let's take a look at gold here real quick. 53.32. Gold up $211 today. Holy shit stacks, kids. Wow. Silver, $113. Up $7.35. Precious metals are absolutely freaking roaring right now and sucking a ton of volume out of crypto and other markets. We did not see really any volume big jump on the rate pause from the Fed. We're seeing just a teensy bit of movement here, not too much across the board. Bitcoin, 89,000. ETH at 3, okay. The ETH play is holding pretty strong. See, I do degen stuff. XRP, we've been waiting for a while. XRP and I'm not being negative, this is your month chart. That's boring. You had a pump. People use it as exit liquidity, and then we went down in volume again. You could see exactly what happened here. The big volume came on the downside of this move. It was a lot of people getting out at that 230 range. A lot of people. Crypto's volatile. It's just how it is. On the aggregate, zooming out, a lot of players look pretty good. There's a lot of them, though, that look really, really bad. Hedge. Let's ask a serious question. Klaus, XRP went to the moon. What price would you feel comfortable selling it at? Honestly, like, I don't look at XRP for me as something that I'm going to be like, oh, this is life-changing. No, like, dude, for me, like, I don't want to give away too much. But for me, like, I gotta watch how I see this. I gotta be honest and say, like, for me, I can comfortably just pull the trigger, like, whenever. And, like, it's cool. Like, I mean, get more out of it, awesome. Like, hold it for longer, awesome. Hold it for, like, 5 years, okay, cool. Hold it for the next election pump, okay, cool. I mean, like, I didn't chase. Like, y'all know, like, I did not chase. And I've been doing this for, like, what, 6 years on YouTube and, like, 2 years before this. So, like, I've been doing this for a while. Like, not new. So, just throw that out there. Yeah, as New Yorkers say, bullshit walks. Yeah, money talks and the rest just six bros. So, 227 right now, 3 minutes until the Fed comes in. That BitGo IPO looking like a dud. Ooh. Wildcat3 says, YouTuber Cheeky Crypto is one of the most egregious hopium pumpers on the platform. XRP price will be $10 gazillion per Friday. Yeah, but that's called, like, confirmation bias. Like, who really wants to hear that something they put money in sucks? No one wants to hear that. That's why a lot of times when markets go bad, like, views go down because people don't want to hear the bad stuff. They put their head in the sand. There's a total confirmation bias. You, like, how it goes is, like, you could have something wrong with you. You'll look up, like, 10, 20 different, like, videos on it or things on, like, WebMD. You'll find the one that you think fits what you think. Like, it's confirmation bias. Great live, Klaus. Thanks for bringing us real news. Thank you, Chameleon420, and love the ending right there. Powell needs to retire and fade away. Jerome Powell will be done in May, everyone. His term is done in May. And Trump, we know, is obviously not picking him. By the way, too, we haven't heard yet from Trump on who he's going to pick. And he said he would pick that person in January. Kind of interested in how that's going to go. Let me get a little water here. Bullish IPO is the worst. $115, and now it's at 34. Crypto company based in the Cayman Islands. Cayman Islands, yeah, if you want to do shady stuff, base it out of the Cayman Islands. Base it out of, like, regions near the Bahamas. Like, you could get away with a lot of stuff there. Like, because those governments just want the money. Blue Noser says, go buy some supplies for your pew-pew. Ooh, thank you, everyone. Give Blue Noser a big thank you for that one. I'm probably going to have to get some more supplies. We do want to get a front grip for the, for my daughters. We do want to get a front grip for that one. Shout out to Kakalaki. Oh, I was just talking about my wife about Kakalaki today. If those of you who don't know what Kakalaki is, The people from Kakalaki will tell us, oh, look who is coming to the podium. Gonna wait for JP to come on the mic, and when he does, you gotta let me know how the sound is. He's gonna open that door right here, and all hell is gonna break loose. We'll keep the market updated. Oh, here he comes. Jerome Powell.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timros, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas, but I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Mike.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something there's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, I mean, what's your view on the market movements? I mean, what do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. So is that, you had a follow-up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
you, Chair Powell. Mara Mokwe from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to employment have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the two goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2%, ex the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
You know, we haven't made, you're right, we saw the labor market weakening and we acted. And I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot, really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with, and that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth.
Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context, this is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Thanks. Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll jobs softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions, and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially, the economy has once again surprised us with its strength, not for the first time. And, consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative, and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy, and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors, where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart, because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly to finish the job of getting inflation back down to 2%.
You mentioned the AI build-out as being positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time, is rising productivity. So and we always ask, well, this is going to be different, is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Thank you, Chair Powell. Bayi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly precisely when this will happen, but there's an expectation that sometime in the middle quarters of the year we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we will be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it, as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of, certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind-Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here and like maybe happening now with AI, we're all over that. And, everyone studies those periods, and, we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not. We're not, no one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time.
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data, and our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
Can you tell my guy is getting near the end of his term? Like, look, he's done in May. That's all you got to think about right now. He is done in May. And yes, we do need clarity for crypto. Whatever is going to give us yield, we need that kind of clarity for crypto. We definitely need the regs. We need more than executive orders. Powell, wouldn't be surprised, if he pauses the rest of his tenure here. Honestly, I wouldn't be surprised if he pauses the whole way through. He had some very interesting comments. Again, they got to look at the data. And one of you posted a comment saying like he never looks forward. And it's true. The Fed, this quote version of the Fed, this group of Fed leadership has been very fiscally late to the party. And that's hurt a lot of us. And there are times where we could have used the cuts, and times where, honestly, we needed the rates to go up quicker and earlier, and we just didn't get them. And the Fed has cost us a lot. I don't think the Fed has been a tool that's been well used. I also don't think that the Fed system itself is a really strong tool either with certain situations, right? Like I said, it's a blunt instrument earlier. For certain things, it is freaking great. You want to break some glass? The Fed's the way to go. But the markets just have too much uncertainty. Gold, silver roaring. Gold up $242. Silver up $8 right now to 114. So when you have uncertainty, what assets do really well? Gold and silver. Right? Gold and silver. That's where people go. When shit is wonky, that's where they go. That's why this chart looks so nutso for gold and silver, and why crypto can't get it out of its own way. That's essentially the key right now. Crypto needs something. Otherwise, I think you're going to have more people bail on it. And it just, the way it is. And this is all industries. When gold and silver were real low, when silver was in the $22 range, everyone was like, It wasn't gaining a lot of attention in the news. Not at all. Not at all. It just was boring. Same thing with gold. Gold, like a few years ago, was really boring when we were floating around the 2,000 mark. The miners, yeah, they were making money, but it was kind of boring. And then all of a sudden, homegirl just started taking off. That is what we are getting. I just... It's frustrating because we were promised regs since July. We were promised a strategic reserve, and we haven't gotten crap for it. Like, we just haven't. In fact, these crypto IPOs have been a dud as well. BitGo. IPO launched at $18. It is now at $13.18. Trick says, we knew. Yeah, we did know. And that's how you win. You buy good stuff when it's beaten up. And then when people want it, that's when you sell it. You don't buy something when people want it, because then you're going to pay a premium for it. So what do? You go for things that are going to withstand the pain. Not every company has enough money to withstand a recession. Not every family has the money to withstand a recession. There are going to be people that get flushed out. But if what you're getting into has a lot of cash on hand, if you have a lot of cash on hand, you can withstand recessions better than most. If you have access to good, affordable credit, you can make it. So the deal is pretty simple. Gold and silver are telling us right now that, you know what? This is just time to hold on to the craziness. And until we get regs with crypto, you're going to see the crypto sector kind of suck some balls. And yes, trust me, I should probably be selling, $1,000 XRP tomorrow. Here's the path. Must see this, blah, blah, blah. No, I'm not going to lie to you. I know. My job is to get more people to view. I know my job is... No, my job is to tell you truth, good, bad, happy, or sad. Hopium Channel's jobs is what? To get you to watch no matter what. I bring you news, good, bad, happy, or sad. I can look in the mirror at night and feel good about myself. Dean says, so do you think it's going to take till the end of the year before it rises, or when do you think an estimate to have a guess? If we don't get crypto regs soon, midterms could shoot regs for the next 2 years after that. It's easy. If midterms don't go our way, and by our way meaning getting more pro-crypto Democrats and Republicans in. It's not about getting just Republicans. You need both sides of the aisle to make this stuff happen. If you get more crypto people in, we have a chance. We really, really do. But if all of a sudden the election comes and crypto's not a big voting thing, and it doesn't really sway the election like the last time, because remember, elections have things that swing them. The BLM movement was a big thing that swung, a couple elections ago. We've had before naughty, nefarious presidential things swing elections. Ooh, there's always a last-minute bombshell to try to swing elections. And it always changes, right? You don't play the same pony over and over and over again. So, we had the Rona playing a little bit of action in elections. Yeah. We can't deny that. So, you look at it and you go, okay, be ready for it. Have your cash. Understand what assets will weather the storm. And if you have the access to capital, you can play in those markets. Is there a BLM coin? By the way, funny story regarding BLM. You guys are going to like this. When the BLM thing was hot and heavy, I was going to Colorado to do some prospecting. And I had to contact the Bureau of Land Management, otherwise known as BLM. I did not think about this. So when I contacted the Bureau of Land Management, needless to say, they were not as friendly as they could have been. They thought I was like joshing them, and I was like, no, I'm literally coming here from really far away. There's a few things I'm looking at. Are there forms online? Can I have like the booklet? Can I have the description for prospecting, blah, blah. And like, it took a while for that lady to be like, oh, this guy is real, because they were getting a lot of calls because they were the BLM and people were effing with them. Yeah, dude, totally crazy. Sorry. There you go. Sorry. That's my BLM thing. Hey, Klaus, I think my sports cards hold more crypto or value than crypto. So I got a whole wall of Pokemon cards. Do you know how much they're up compared to crypto? A shit ton. I deal with the BLM Weekly. Writing checks to them is always a chuckle. I told you, it's the it's seriously. I went to Colorado when all that stuff was hot and heavy, and it was the funniest conversation. And then I met them in person, and they were super, super nice. Like, really, really nice. It's just not the same watching without your blazer. All right, I'll put the blazer on soon. Not in this video. Maybe I'll do it for like the recap tonight or the morning one. I got it right over there, the old John Wick blazer. Any questions or comments y'all are thinking about? Put them in the description or the comment chat thing. Tyron Copeland says, if we don't get regs before midterm, I'm going to sell half my bags for profit. I'm not going to watch my portfolio crash back down to Gensler prices. Yeah, I'm with you on that. I completely understand. I think midterms are going to be nerve-wracking. That's why we either get this done right away or we're going to have to wait. Like, it's just, that's the nature of the beast. Midterms are in November for those of you keeping track. I pulled Lil's Clefairy. Ooh, Clefairy. I like that. Clefairy, nice. Well done. Senate Ag Committee meeting tomorrow at 10:30 a.m. Klaus, any optimism? It should go through the Ag Committee. The Ag Committee is Republican led and a Republican majority. But once it gets through the Ag Committee, it's not going to go anywhere else because you don't have the Senate banking part to coincide with it. You need both of them to make it. So is it progress? Yes, but then it stops. Let's see. Klaus, I appreciate your honest report. Happy, sad, or bad. At this point, that's what you got to do. You got to shoot it to people real. I think you have to at every point. I think a lot of these channels, though, that spew hopium should have a disclaimer at the beginning that says, like, this is all about fucking, like, well wishes and fairies and princesses and unicorns. Throwing it out there. John Wick, you got a bulletproof blazer. Hell yeah, that goes good with the pew-pews. If regs are passed, but Warren's disaster would actually be priced go up. Yes, if regs were to pass, you would see crypto go up, but it wouldn't be nearly like as if we got the stablecoin yield in there. The stablecoin yield thing is... It unlocks more money than is in the crypto market right now can come from unlocking stablecoin yield. That is how much that's at stake. That's why the banks have put like the total kibosh on the crypto regs because they know this one thing could drain them for about $6 trillion. So, yes, it's going to pass tomorrow. Is it going to have the impact on the market? No, because we need the banking part from the Senate Banking Committee to come up. And then, once it comes up through the Senate, that should be enough to get us to go to the House. The problem is, remember, you need 7 Democrats to vote yes for it. Yes, the Fed did pause. What we're going to do right here, we are going to end the stream at Jesus, Klaus, what the hell time is it? At 3:30, end of stream at 3:30 p.m. Eastern time. So make sure you get your comments in now. I've got a few dad and husband tasks that I need to do. And yeah, the whole thing is you need yield. Seriously, for everyone asking the questions right now, you need yield. You need to take the power away from the banks, or the banks will just suck crypto dry. Plain and simple. The banks don't want to give up that much control. That's why we need yield. It is so freaking important. Again, get your last questions and comments in, whatever you want to talk about. Yeah, Manny means the banks. I'm with you on that. The BitGo IPO, gone. Just putting it out there. That thing is gone. Volume for crypto. Let's give it a little refresher-oni. Not much volume on the Fed announcement, so honestly, the market is fairly muted. Across the board, we're where we were 24 hours ago. I mean, look at this. In the last 24 hours, Bitcoin up only 0.78%. XRP basically flat. ETH up 0.66. That's how it is. Family comes first appreciate your grind, dude. Oh, I trained already this morning with my 2 kids. You know what we're doing tonight? We're training again. And maybe we're going to find my glasses. You know I got the other ones on today? I do. Let's see, only a half of us, the shooters, know who's free, right? Yeah. What is it? You got to take them away from me? What's your honest opinion of Sol hitting $1,000 down the road? Everything I'm reading is showing how it's outperforming ETH. Sol is a tough one because every time Sol roars, the big money just dump it, dude. Like, that's the big problem, man. The big money dumps it. And I think that's the big frustrating part with Sol. It's had those issues, and it's just been hard to break them. Chameleon says, hit that like. Thank you. I greatly appreciate that. Boozy B says, thanks later. Thank you to everyone who has been watching and hanging out with us today. Again, we will be live streaming the Senate tomorrow. Yes. I will get a more updated time frame on that. They start at 10:30, but there might be a whole bunch of crap they talk about. So I might be able to save you a few hours of not like banging your head against the wall. Hobby time with Chris says, thanks. Nope, thank you. I appreciate it. Yes, live is tomorrow. Any other last second questions or comments? Because you know what I'm going to do, right? I'm going to play some music. Why? Because I'm a good person. That is why. Let's just do one more question. Deanne says, do you think it would reflect bad onto Trump when he's hyping up crypto, or do you think it's a matter of getting rid of Powell? Trump should not be hyping up crypto because he's overpromised and underdelivered. We don't have a Sol, ADA, XRP reserve. We don't have tax breaks for crypto. We don't have tax breaks for U.S.-based crypto companies, which was floated around. We haven't seen any of the Doge stuff, really. We haven't seen any of the refund checks that have gone through. We were promised crypto regs by July. We didn't get that. We don't have a strategy. Yeah. Look, just overpromising and underdelivering. That's all that it's been. So now you get some money. Hasta luego, hermano. Buenas tardes, jefe. Choo choo what when you know the deal, lemon peel. Choo choo bitches.